So I mentioned we're looking for the consequent encroachment of this candle's wick right here. That price comes in at 4,072 3/4. The dashed line is going to be an old high formed here, and we'll drop down the lower time frame now. The 15-minute time frame is a bellwether chart for me. It means most of everything I'm going to be looking for can be found on this time frame relative to weekly and daily time frame. So if I understand where my draw on liquidity is from higher time frame, daily, and or what my expansion is going to be for weekly, is it more likely to expand higher or more likely to expand lower, I can jump right to the 15-minute time frame and find everything I need to utilize for a trade idea. And I want to take a look at the morning session here. Here's the midnight time frame, and we'll note that opening price here. And you may not see it very clearly, but if you see that purple line here, 40.36 3/4, I'm annotating that as the midnight opening price right here for December 26, 2023. So if we're looking for longs, as I indicated last night, we're looking for higher prices on the stock indices. The ideal scenario is for the algorithm to reprice below that midnight price right here. So you see it do it here after 8:30. So here's 8:30. That's our trigger time. So everything starts at that moment. So 8:30 and then 9:30, we drop down on the 15-minute time frame right before we get to 11:45. So 10:45, that candle, we're dropping down. We're attacking an old low here. We're below the opening price at midnight. So this is allowing smart money traders to get on board with longs to target this high and that 4,072 3/4 level that I gave you last night. So last night, hours before the market would even start trading in our New York local time, down here, our focus was up here at that price level. The levels that I gave for NASDAQ, notice that it did not deliver there. It delivered like gangbusters here on this market. So I'm not making a case that I picked the right one, so therefore I'm smart. I'm just saying, following one market, I don't care that NASDAQ didn't reach its objectives. This is the market I'm trading. This is the market I'm dialed in on. This is the only thing I'm focusing on right now, and it's more than enough. So let's take a closer look. We have a rejection block here. After the market runs up at the 9 o'clock hour, we break down. One more time, it stabs up above the uppermost closing price here. That's a rejection block. It breaks down, and then it runs below the opening price at midnight over here. Now, this move here, you might look at that on the lower time frame and say, yeah, that's my model, that's my setup. There's nothing wrong with that. Others that are looking to trade on a longer term time frame, they can't trade ahead of news reports and take advantage of the small intraday fluctuations for scalping or day trading. They have to position themselves on a swing trade. Well, this is how you do it, folks. If we're bullish and we're looking for a move below the opening price to get an ideal Power 3 entry, and that's a mouthful. My concept, Power 3, is where we're looking for the accumulation, manipulation, and distribution phase of the daily range and or weekly range. But it also can be utilized inside of the sessions, like the morning session and the afternoon session. Each one of those fractals in time, a perspective, if you will, and framing the price in the context of a specific range of time. Power 3 is when I'm bullish, I'm expecting the low to form below a key opening price, and the key opening price for the daily range is midnight New York local time. So we drive down below that into a old low. So sell side below this low is collected, engaged. Why would that be necessary for the market to see that? It's going to drop down below there to absorb all that sell side liquidity and be counterparty to their smart money longs. So they're buying the sell stops here below the opening price at midnight. So that is where you could have a order if you are a swing trader or non-intraday trader. the way you would do that is you would just have your alerts set to tell you when the market dips below that opening price or gets close to it. And if you're bullish, you can put limit orders down there, and then whatever the high you're aiming for, there should be two of them. The high of the day that's formed, and then the target you're reaching for, as we outlined last night, the 4,072 and 3/4 level. You don't need to be babysitting it. Your positions will be very small, probably one contract, or maybe even a micro, and you just let it go. You don't worry about all these small little fluctuations I'm going to cover now. So the market drops down after creating a fair value gap here. It retraces back into it. Consequent encroachment. I called this live. I outlined it, framed it, and said as soon as it hit this level here, as we'll look at on the 1 minute chart, I said this is exactly when it should reject and look for it to go lower and reach for the 4038 level. And that was this sell side liquidity here. The market drops down, digs into the sell side, accumulates, drops back down into the order block here, rallies. We consolidate. This range here is an hourly imbalance. So this little shaded area, if you find your hourly chart, you'll see that there's a fair value gap there. Market rallies, small buy side imbalance, sell side inefficiency, comes down, overshoots that, rallies again, fair value gap, order block, trades down until here, and just real choppy, but still continuously grinds higher, keeps grinding higher. Every time it created a higher high and started to break down, retail traders were expecting this thing to break down. And your focus was where I was telling you last night. Look for that 4,072 and 3/4 level. There's nothing to fight. You don't want to try to go short against all this because the algorithm is just going to keep on repricing higher and it'll frustrate you. And you can blow your account getting revenge trading, trying to short something like this and not know what it is that you're looking for. Dropping down to the 1 minute chart. All right, this shaded little trend line here, okay? That's denoting specific elements of time. So we're looking at a time window where the market starts trading approximately at 9:30 in the morning. And that shaded area right there, that fractal, that amount of price action, that is all you need to worry about if you're trading in the morning session. Just that. If you start looking at your chart like this, framing it out inside that parameter of time, 9:30 to noon, and start looking for inefficiencies where liquidity pools are, where's there a shift in market structure that's bullish or bearish, something that would jump off the chart, and obviously what I'm going to cover here should be jumping off the chart already. The market trades higher multiple times, higher, and then breaks down. We have a imbalance here, but this has been shown on the higher time frame. But you can refine it. You can use this low and this high here, draw that out in time, and it would completely fill in perfectly like it is here. But from the higher time frame, this is what it would be like, seeing it this way. Then we have the market consolidating in here, breaks below this low here sharply, leaving a fair value gap. Market rallies up, and right on this candle here, I actually mentioned that this candle is what you should be focusing on Twitter. The fair value gap here, I outlined and said that we would be looking for this low here for sell side liquidity. And I mentioned I wanted to see it as it stabbed up into it right there on that very 1 minute candle. As it was a bold face run up green candle, I tweeted and I said, I would want to see the fair value gap be rejected right here on that candle. And then on here, I said, just like that. The market does what? It aggressively, quickly runs to the sell side liquidity here. And then I remind everybody that everyone should be square and not in the marketplace. They should not be in there holding on to it. Why? Well, you're learning now. Here's that opening price again. That light shaded purple level at 40.36 3/4. Where are we at below here? Below that opening price in a time when I'm telling you last night it's bullish. So smart money is going to accumulate longs down here. You don't want to hold on to your shorts, expecting it to keep breaking lower. The market rallies, builds a fair value gap here, accumulates, and goes into the lunch hour consolidation.